Good evening, traders. Good evening. I trust you're well. I trust you're having a wonderful evening. What I would like to showcase to you all today is the power of the Asian range break and retest method, our famous ARBR method within MGR Forex Trading's Institute. So without further ado, let's head right into it. As you can see over the course of Monday, the 16th of September, and Tuesday, the 17th of September, which was yesterday, we had two lovely buy opportunities, which gracefully hit our take profit. As you can see over here, we had a lovely buy, and as you can see on Tuesday, we also had a buy within Monday's buy as well. So it was quite an interesting trade opportunity on Tuesday. As you can see, we were running two positions at the same time, and one within the other as well. So it was quite fantastic. It was quite awesome. And the question is, why was I buying? What did I do? And what is the theory behind the famous Asian range break retest? And I'll show you exactly. So right now, as you can see, there's a bunch of boxes on my chart. You might be wondering why the boxes. I'll tell you why. These boxes indicate Sydney's session, and being AUD USD that you are trading. Of course, as you can imagine, Sydney is the capital city of Australia. And yeah, so of course, when people wake up in Sydney at 8 a.m. and they work, they go to work, they do the thing, the market moves. And the AUD market especially moves because that's their currency. Yes, it's paid up to the US dollar, correct? But ultimately, what happens in Sydney is going to impact this market far more than what USD fundamental might. Fundamentals aside, the macroeconomics aside, looking at the technical analysis perspective or the technical analysis aspect, looking at that, I got a box from midnight South African Standard Time to 5 a.m. South African Standard Time, also known as Universal Time +2, and your time zone would be Johannesburg. That's midnight till 5 a.m. So of course your candle will close on that 4 a.m. candle, meaning your box will only be in between 4 candles. Now that you know that, what happens when price breaks above the box and what happens when the price breaks below the box? This is what happens. If price breaks above the box, you place a buy position, and if price breaks below the box, you will then place a sell position. What's your risk to reward? That would be 1-to-1. So whatever your box is, that's going to be your risk, and your reward will just be your box duplicated on top of each other. Of course, wherever price breaks above or below, that's where your stop loss will be placed. Your stop loss will be placed below the box if it's a buy, and above the box if it's a sell. It's very, very important that you understand this. So I hope you have noted that down. And let's head right into this example once again. So as you can see on Monday, the 16th of September, we broke above the box. With us breaking above the box, what occurred? We then entered into a buy position. Where was our stop loss? It was below the box. So it was around 330 pips. And of course our stop loss or our take profit was also around 30 pips as well. Now that you have seen that, you can take a screenshot. I will remove this box. Why? I want to focus on what occurred on Tuesday. So on Tuesday, as you can see, we had a smaller position, round about 17 pips, and price of course ran all the way up to the upside, and we hit our take profit today at around 9 a.m. Around London session time. That's awesome. Take a screenshot of that, and let's head over to Wednesday's example. Now on Wednesday's example, what occurred over here? On Wednesday's example, we broke below the box, didn't we? We definitely did. We broke below the box, and with us breaking below the box, what do we then do? We then place a sell. As you can see, I have these horizontal lines that outline the box is high and the box is low. This is extremely crucial because, of course, as you know, you place your position once you have candle closure below or above the box. So we had candle closure below this box over here at around 6 a.m. Fantastic. So we had that below. Great stuff. Wonderful. Awesome. What then occurs. What occurs is this: we place a sell. We placed our sell and price immediately reversed and hit our stop loss. I mean, it wasn't even 3 hours and price hit our stop loss. I mean, that's 3 candles. So that was quite a immediate stop loss. It tells me there's been worse. Um, as in the next candle just runs all the way up and hits a stop loss. Look, any any method of trading in the financial markets is prone to sustain a certain amount of losses. That's totally fine as long as your profitability at the end of the day or at the end of the month remains profitable. That's what matters. There might be times where you have a losing month, there might be times where you have a losing quarter, a losing financial quarter in the year. There might be times where you even have two losing financial quarters. But as long as at the end of the year you end up profitable, that's what matters. Trading is a long term game. You're not going to make money now. You're not going to. Oh, wow, well, I mean, if you take a position like on Monday, you'd make money on Monday. If you take a position on FOMC tonight, a buy, you would have made money tonight on the buy. You can make money today, correct. But long term, you will sustain losses. And managing those losses, managing your profitability, that's what's going to keep you profitable in the long run. And that's extremely important. With that being the case, as you can see, we obviously hit our stop loss on Wednesday, so we had a take profit on Monday. Tuesday, a lovely take profit as well. Wednesday, stop loss. FOMC, however, was a beautiful take profit as well. So awesome. So what happened on FOMC? So this is not really part of the Asian range break and retest method of trading. I don't, of course, teach this. In fact, I did not send this trade opportunity out to the group, out to my traders, because I know that is not part of the rules. However, I went ahead and I took this position because I do have a small bit of experience with trading fundamentals. Okay, I have quite a bit of experience with trading fundamentals actually, now that I think about it. But regardless of that, I decided that it would be a good idea to take this position because I knew that fundamentals tend to move according to technical analysis. However, it only moves according to the longer term trend. So as you can see over here, I saw this lovely uptrend and I thought to myself, well, FOMC is most likely going to have a beautiful run up. So I thought, you know what, I took a loss today. Let's place a buy and let's take it from there. I placed the buy and awesome, we made back the loss. Cool, great. However, my traders have not. So that means over the course of Thursday, which is tomorrow, and Friday, we will definitely have to find ourselves just going ahead and trading first of all, and taking it from there and seeing how things go. But aside from that, that was the trades over the course of this week thus far. It is middle of the week. It's Wednesday today, so we had 4 trades taken, 3 take profits and 1 stop loss, which is quite good. I think that's not a bad week of trading thus far. If Thursday and Friday is a stop loss day, then at least we can find ourselves ending off the week break even. I think that's quite good. Definitely very, very good for 1 week of trading. Of course, there are many, many weeks. The ARBR method is a fantastic method. It's out for free. It's out right now. You're welcome to use it. I use it every single day. So I know that this method it works very, very well. And we can certainly take it from there. But yes, other than that, have a wonderful evening. Keep warm, keep safe, and I'll catch you in the next one. Cheers.